Hey, good morning, everybody. This is RJ Baxter with Fairway Independent Mortgage with your Saturday strategy. Hope you guys are having a great weekend so far. And I apologize, I don't have a camera here today, so I'm just going to do a screen share video, and you're going to have to just deal with it and not see my smiling face this morning. But you probably don't want to see that on a Saturday morning anyway. But let's get right into it. I want to talk about buying power today. And with interest rates going up here this last month, this is on a lot of our buyers' minds. So let's go over to an illustration that I can produce for you guys on buying power. And I can put this together for any sales price, down payment, or scenario. So if you have a particular buyer this weekend that wants to look at how their buying power may be affected by changes in rates, I can definitely send this out to you. But this is just an example, and this shows a $700,000 home with 20% down. So loan amount $560. And I'm using a base rate of 3.75%, which gives a monthly payment of $24.75. Now that's principal and interest only. That doesn't include taxes and insurance, so that's something to keep in mind. But if we go down below, what this chart shows is basically what happens with increases in rates. So you can see here, if the rate increases by 0.5%, now we are more like in this range, more like mid to upper threes. It's 3.375 is not attainable for most people without buying the rate down. So just keep that in mind. But I just wanted to use that as a baseline in case rates go down a little bit. But you'll see a 0.5% increase on this particular example increases the payment by over $150 a month. So definitely significant. And then the other piece of it is you'll see here the change in the payment based on the loan amount, or how much the buying power goes down as the rates go up. So to keep that same $24.75 payment, if rates go to 3.875, you can only the buyer could only borrow $526,000. So that significantly reduces the amount of house that they can purchase. This is especially illustrative to renters right now that are waiting to see if the housing market crashes, because you could also show this as an example of what happens if home prices go the other direction, which is more likely than not. That same $700,000 house, let's say we get historical appreciation this year of 5% in Denver. That $700,000 house will be $735,000 in a year, and that same home buyer, instead of a $560,000 loan, is going to be looking at something more like a $590,000 loan, or $585,000. And just by looking at this chart, you can see what a $25,000 increase does. It's going to increase their payment just because that house is more expensive. And most renters can't save money fast enough to keep up with that. So if the goal is to get a lower payment or wait for the market to crash, they could be shooting themselves in their foot and be looking at a higher payment down the road. So hope that helps you guys out. Again, if you want me to put together a scenario for you for your particular buyer, or for just a generic one to send out to you, just call me, text me, email me up here, and I'd be happy to do that for you. And also, if you have any buyers that need help with pre-approval, always here for you for that as well. Thanks again, and have a great rest of your weekend.